Folks, it has been a while, but we're back to take a look at this portfolio, show you every single position, returns, all of it. All of it. Excited to show you all this stuff. I hope you're excited. Overall movement, obviously it's worth talking about performance. This is one that obviously we're reviewing the portfolio. So it's been a few months since last time. We'll just go through in the last week. I'm down 0.02%. Not a great performance for me. Nothing crazy in a week's time. In the last month, nothing crazy here either. Only up 0.66. Would like to see more return there, $227. The past 3 months up 5.32%, which is a $1,754 gain. Good stuff. The last year up 44.97 or $10,778. Really happy with that. And all time, this bad boy is up 89.37% or $16,399. And if you're aware what all time was, it is as of July of 2017. Little birthday present to myself back then in 2017. So we've been running this portfolio for now just over 4 years. And, up 89% there. I'm pretty excited with that. I'll take an annualized growth rate over 20%. Makes me feel pretty happy. So let's take a look at these positions. Let's just start rocking it out. So Apple, for first position, I have these pretty well organized by sector for the most part. Some differences, but this is what we're rolling with. So let's start with Apple here. My average cost on Apple is sitting at $46.97, which is obviously fantastic. 21.54 shares. Fantastic because you look at this total return, it looks good. Making up a good portion of those returns here. $2,132 or up 210%. That's nice. I'm very happy with that. Glad to see the position performing super well. Facebook following them. Average cost on Facebook here is $167.49. I've got 9.18 shares. Total return here, $1,797 or 116.9% upward. It makes up 9.6% of the portfolio. Great performance on Facebook, so I'm very happy with how that one's done for me as well. Can't lie to you, really happy with Microsoft too. What a smasher here. $93.63 per share is the cost basis. 4.38 shares. Total return here of 208% or $857. Obviously one I wish I'd sunk more into back in the day. But still time for that. Disney following them. Cost basis on Disney is $102.07. Used to be under $90, under $99, but added some to my position this past year. 7.29 shares for a total return of 73.27% or $554. Oh yeah. Cloudera after them, tech company, gotta love it. $7.90 a share is the cost basis. 15 shares. It was the first lot I bought of them, just 15 shares. And I was pretty happy with the performance so far, so kind of working on holding it here. Up 100% or $119. So one I'm just holding. Good performance over a year and a half span, so I'm going to keep holding on to it. AbbVie, drug producer here. We see an average cost basis here of $73.30. 4.24 shares. Makes good return here, 56% or $174. Pays a great dividend as well. So one thing I certainly look forward to is a good dividend there. Gilead Sciences, same story. Love a dividend on this company. Overall performance has been not fantastic for me. Cost basis of $64.98. 7.34 shares. Only up 5.85% or $27.95. One that really hasn't performed well. Last year, pretty well devastated where the stock price was at, despite being, identified as a potential way to mitigate symptoms for a global pandemic. But, it is what it is. But, it's been hit hard, but dividends still yielding over 4%. So it's been one that I've been happy to hold still. Ford Motor, really happy performance recently here. $9.23 is the cost basis. 70 shares for a total return of $319 or 49.49%. One that's finally paying off for me after a while, after dividend cut and everything. So it's good to see some return there. New York Community Bank after them. One I've had since the inception of the portfolio, actually. Nothing crazy here, but pretty decent dividend yield. $10.71 a share, 28.08 shares, for a total return of 13.73% or $41.28. So small return, but again, it's more of a dividend payer, which isn't actually listed on the returns. It's not included in the return. After them, Charles Schwab, more into the financial sector. This used to be a TD Ameritrade position, which actually got obviously bought out by Charles Schwab, so it turned into Charles Schwab shares instead. So the cost basis is, it says that, which isn't correct, right? So this cost basis is jacked, and that's just because it was the transfer of shares that I didn't have prior onto a new company. So don't expect this to be accurate at all, but I do have 4.03 shares here. I would love to say I could bolster a 13,000% return. Maybe one day. Don't worry, it's coming. Then we have Target, getting a little bit into the retail sector here. With Target, great performance on this one for me. $95.59 a share here. 6.8 shares. Overall return of 172% or $1,119. Target's been great for me and pays a good dividend as well, so really happy with my Target position. Still into the retail segment, we've got Kohl's. Very up and down, obviously, performance here with this one. I mean, you look over the last 5 years, there were some higher points than this where it reached over $80 a share. Right now sitting at $52.97, but cost base is still good here, $26.09, 16.25 shares, so I'm up 103% or $436. Also was a fantastic dividend payer in its time, which it'll be boosting back up now, which is good to see. Tapestry, same story, great dividend payer, which is why I bought it, but I really stuck around for capital gains here. Good grief, $17.24 a share. 22.8 shares. Total return here of 155% or $610. Pretty significant for me, so really happy with that, and that's obviously excluding when they start paying a dividend again. It's going to be great. I'm excited. Still retail, but we're talking e-commerce now, okay, baby? Stitch Fix. $22.89 a share at 10 shares. Just bought the one lot of them when I bought them. So overall, total return here of 99.41%, nearly 100%. Double my position nearly. $227 is the return. Nothing crazy, but I expect a lot of that company over the near-term future. So that's why I'm still holding on to that bad boy and not claiming a return. Home Depot has been a solid rock for this portfolio. Not really much of one. It's more of a pebble, frankly, because it's such a small portion of it. But it's been great. I bought one share at $161 back in the day. Since then, we've had a little bit of dividend reinvestment, so $1 or 1.02 shares. But overall, still up 104% or $173. I can't complain with it. Something I just sank $100 into at the start of the portfolio when I barely had $2,000 in it. So pretty happy with that. After we have Home Depot, we're back into let's move the e-commerce. No, the clothing stays together. We're not shifting those yet, okay? We don't shift it. Let's go into some consumer products here with Coca-Cola. Performance has been not terrible on this one. It's one I hold primarily as just a consistency play and a dividend play. $45.29 per share, 7.5 shares. Total return of 25.28% or $86. Nothing crazy by any means. Then we have Starbucks, more consumer goods, man. Everyone loves Starbucks. I don't, though, because I don't drink coffee. But $53.19 a share, 2.04 shares, nothing crazy, up 123% or $134 is what that relates to. So, or correlates to. Nice to see. After Starbucks, we have iRobot, which has also been one that's been very shaky. You look over last year, at one point This thing was, booming over $160 a share. Didn't sell it, unfortunately. But still, average cost base of $52.38. 9 shares. Just bought the 9 flat out. That's been the position. Haven't added to it since. But I'm up 63.87% or $301. Was up a lot more back in the day, but you can't dwell on the past. You can't dwell on the past, okay? Sometimes we don't sell in time, but it'll get back there. You don't need to worry. Then we have Micron Technology. Great company. It's actually started paying a dividend, which is not why I bought it by any means. This has been a position for a while. $45.19 a share. 10 shares here, but up 81% or $367. Plus, now I'm going to add dividend income in there too. Beautiful position for me. I love Micron. We have Cisco following them. $39.16 a share. 5.45 shares. Performance here, it's more of a steady play again, like I mentioned. Pays a good dividend. $41.96 a share. What am I talking about? 41.96% up, or $89 in gains. We like seeing that. We really do. We really do. Garmin, one that I bought solely just to track an options play I had that paid out $80.69 for the 1 share I bought. There was some dividend reinvestment, so we have 1.02 shares, up 105% on this position, or $87.35. So it worked out a lot better. Obviously, the options play worked out a little bit better than that, but good to see the performance there. Really good to see it. ADI has been here since the dawn of the portfolio analog devices. $80.43 per share. I only had the 1 share, but we have dividend reinvestment as well, so 1.02. Up 112% or $92. So really got some good performers in here. That's good to see. After ADI, we have HPQ. We all know HP. One that took a while for it to really pay out for me, but still, again, good dividend payer. So I wasn't necessarily in it for high capital gains, but we've been getting some good return lately. $18.04 per share. 14.299 shares. Let's be clear, it's not 14.3 yet. Close, but not there. Up 62.5% or $161. So, it's paid out more as of late, but again, still in it for the dividends. So I love seeing the dividends. I do. Activision Blizzard, one that's been under some scrutiny lately, but cost base is still low on it. $56.97, 2.02 shares, not a massive position. Up 44.38% or $51. So we take those. Now we're getting to the real estate investment trust segment, which I have quite a bit because, again, this portfolio is kind of focused on dividends. We have Realty Income here. Cost base is here 51.01, so you're going to see less capital gains here for the most part. But again, the focus here is going to be on dividends, and you see from the history with, where's history on this? There you go. With the history of this, you can see overall dividend payments here, reinvested, $5 foot long, dude. I could buy a foot long from freaking Subway if I wanted, due to all these great dividends from Realty Income every single month. Monthly dividend company. But $55.01 a share at 22.14 shares, up 28%, which is actually the equivalent of $345 because it's such a large position of this portfolio. So good stuff to see there. And again, dividends, they're great on it. After then, we have Iron Mountain. Really like this one. Has been paying off a good bit lately. You look over the last month, up 6.87%, up 9.9 in the past 3 months. So performance has been good for Iron Mountain. $32.31 a share. Great dividend yield over 8%. 34.54 shares. So total return here is 39.48%. Or $440. But again, the dividends are more important to me. And you look down at the history, and again, every quarter I'm getting 21 back. It's good to see. Good to see it. Makes you feel good. OHI after them. Have had this one for quite a while too. Cost base of $28.65. 23.9 shares. Total return of $22.58 or $154. And then getting great dividend payer on here over right around an 8% yield on this one as well. So really good to see. After OHI, we have ABR, which has been an outstanding, just stellar performance. crazy to see both capital gains and great dividend income, but this one's been able to do it for me. $8.86 per share, 79.29 shares here. Overall return here of 107% or $752, which is great capital return when you think about and you look down here. Every quarter, this thing's paying me $26.48, and that only goes up because we keep reinvesting for more shares. So, yeah, that's been a great payer for me. Love it when you're getting over $100 a year there. APLE was one that it's seen some better days. It has. So it used to be a dividend payer, 10 cents every single month on the dime. It knew it every time, 1 dime a month. So I loved it. I loved the position. But since they've lowered that due to last year, which makes sense, lowered it now to they're paying a cent a month, which I'm not crazy about, but it's something. But I'm still gonna be holding it because I think they will get back to the strength point that they were at. $14.23 per share, 65.7 shares. And again, you imagine every single month, it was nice stuff. We were getting, $6.50. We love it. But overall return here, only plus 2.4% or $22. It's in the positive, so I can't be too upset with it. One that definitely could pay out in the future even more, but already's paid me quite a bit in dividends prior to them cutting it. ARI, again, one that's seen some pretty good performance, can't lie to you. $11.32 per share, 70.7 shares. Overall up 35.5% or $284. So this is that portion where you see when all my other stocks were up 100+%. This is where you see why, overall, all time, it's only up, the portfolio is only up 90% when all those other positions are up 100+. It's because these ones that don't necessarily give me as much in terms of capital gains, but in terms of equity due to dividend income, have performed very, very well. NRZ, happy with this one for sure. Overall, one of my few negative players, but the dividend income has been solid. They cut it. It's coming back. Not quite at where it was at, but still fine. $9.98 per share, 35.8 shares here. Down 1.4% or $5. I've made a lot more than that in the dividend income on it, so it's a very positive position, all things considered, but you'd like to see positive there as well. Prospect Capital has actually seen a great form too, really in the last year, up 64%, which is crazy out of a company like this. You don't expect much of it out of it, but $5.87 a share here, 46.6 shares, also a monthly dividend payer of 6 cents every single month. We love seeing that, okay? It makes me happy. Relatively small position, but still paying plenty of money in dividend income. Up 39.64%, which is incredible to see capital gain even, or $108. So that's really nice. It's really nice. I take it. I take those. Then we get into the ETF segment. Not really worth looking at cost base on ETFs because it's nothing crazy. One of my recent investments here is going to be JEPI, the JP Morgan equity investment fund. Pays a nice dividend yield every single month. Monthly dividend income is obviously something I'm huge into, and I obviously reinvest all of those as well. So great payer here, 19.3 shares here. Pays overall annualized around $100 a year now for me. SCHD, one of my newest one. Charles Schwab, the high dividend fund. Everyone knows SCHD if you're into dividend investing. Great performance on capital return as well as overall dividend yield for SCHD. It's a great one. SPHD, another similar high dividend, low volatility play. Performance has been okay on it, but it pays monthly dividends, so I like that. SPYG, more focused on the growth segment of the S&P 500, which is good. Performance in terms of capital appreciation has been very nice. A good fund overall. So SPYD, another dividend fund. I like it. Pays quarterly, but also has more capital appreciation, potential there as well. KBWD is a monthly payer that pays an incredible yield. It's usually right around 10%. 44.3 shares there. Gives me some great monthly income. So does KBWY, 34.9 shares of KBWY. Really good to see that one, another monthly dividend payer. Great yield on it as well. DIV, super dividend fund here. Great to see 11.42 shares here, pays monthly as well. That hurt. DES 2.07 shares, and SNSR, which is the Internet of Things Fund. DES is a small cap dividend fund, and SNSR is the Internet of Things Fund, which I have one share and just slightly over one share because dividend reinvestment as well. After them, we have some of the more speculative plays that I've added to the portfolio. So we have NEO. NEO, you know this one. If you're a fan of the channel, I've been selling this one for you for a while. And you can tell that because my cost base here is $2.07. 25 shares. I used to hold over 200 shares, or right at 200 shares of this. Sold off a majority of my position, unfortunately, at the $17 to $18 level. And then we saw a bigger run after that. So one I could have made a lot more money on, but still, I am up 2,025% on this one, or $1,047. So it could have been, several grand more, but it's okay. We're only talking about $8,000 I missed out on. Let's forget about that. I made a couple grand in the trade anyway, so we're okay with that. Following them, we have a very new addition to the portfolio, if it wants to load, which I believe it will, frankly, given the time. It's just a little bit unhappy with me. We have Penn National Gaming, brand new addition to this portfolio you haven't seen yet. Cost base here of $66.55 a share, 2 shares here. Overall total return so far has been 8.17%, or $10.88. I mean, you look at the recent history, you can see when I bought it. This was bought July 19th. So since then, performance has been pretty darn nice. Can't lie to you. I saw it at a very low point. It's a great play into sports gambling, as well as the casino play, which a lot of them haven't quite recovered from where they should have been. But that's why I bought into it. I think there's going to be a good recovery over the next year for it. So used to be $140 stock, so I think it'll get back there for sure. After them, Energous has been a pretty sucky play for me. I mean, it's been up, down, up, down, up, down, up, down. Some may say, why didn't you just sell it whenever you reach $7? Look, guys, I was feeling like there's more gains to be had, and I still think there are, so I'm going to be holding on to it. $2.79 a share, 75 shares. Overall return here down 10.37%, or $21.69. So one of a few negative earners here. Kind of a bummer, but we'll survive. Position I bought back into here is going to be Plug Power, one that I like and I will be holding over the next 5 years. I used to have a cost basis here of $2, which is crazy. I sold out again closer to the $15 range, and it obviously, as you can tell, if you look at the last year, went a lot higher than the $10 range. So again, a play I sold out of too early because I was excited. I mean, look at that. I sold it probably around here when it started dipping in late 2020. Turns out it was a bit of a mistake because then it went on the biggest bull run of all time. But that's okay. Cost basis for 26.01, 11 shares, down 0.46%. Nothing crazy, $1.33. But it's one over the next 5-10 years. I think the hydrogen sector is going to be doing great numbers. So I'm really excited for Plug Power over that time period. NBEV, another one. NewAge beverage. This one, not beverage anymore. Now it's just NewAge. They sell definitely consumer products, a lot of them. Don't have a cost base on this again because it used to be NewAge beverage. That's when I purchased it. So overall, this acquisition that they made transformed them into NewAge. So it's messed it up. I do have 200 shares. And performance, I think, could take off for sure. It's in the organic field. We'll see what it is. And then USOI is the last one. It's an exchange traded note, really. Nothing crazy. Very high risk for sure. But very high dividend yield. I mean, we're talking about over 10% yield here. But it's a very high risk play. Overall, we've got $5.18 a share, 20.42 shares for a total return of down 1.47%, or $1.55. Is a monthly dividend payer, and as obviously you can tell here, already has been paying some, decent dividends here. 99 cents there, $1.24 there. So technically we're positive on this one, and we've only had it since June, so we're okay with that. That's what I got for you today, and I hope you have a great day. Let me know what else you'd like to see, and we'll talk about the M1 Finance portfolio later.